Yo guys, welcome back. Today's Wednesday. After a pretty freaking crazy few days, we finally have a little chill in the market. Bitcoin traded up to 26.6, putting in a new 2023 high, breaking through the 200 weekly moving average and really setting the chart up for some explosive upside. The question on everyone's mind, is the rally over? We're going to take a look at that today. I have two scenarios I see playing out here. Not here to make decisions or tell you what's going to happen. I'm no soothsayer. But let's look at the charts and see what they have in store for us. So guys, welcome back. This is going to be a shorter episode. We're going to get right to the chart. Let's take a peek at the corn. We're going to figure out what's going on here with the help of the chart. So here we go. Cleaning this up, let's take a zoomed out look. What do we got? Our descending high trend coming on down. Looks like on the weekly time frame, tested twice on the day, tested on the 10th of this month at 19.5. This coincides with the 200 daily moving average, and this is going to act as strong support. And you guys know I'm always bullish, but I do have a little hesitation here. Looking at our daily candles, we see yesterday was not our highest close. We failed to close over 24.8, beating February 21st or 20th's high. That's not the best sign, though we did get a higher high, which is good. We did see pretty significant selling. It was a little delayed, and we see that here on this high top wick. This high top wick. Describing the selling pressure found at the 200 weekly moving average. So what do I think is going to happen? This is pretty much the pattern we're looking at and is in play until invalidated. Basically, invalidation going to be pushing past that high yesterday, past 26.364, pushing above our high trend line, or falling below our low trend line here, our macro high descending trend. What's going on here does look a lot like a broadening wedge, and I'm not going to lie, guys, I do not like that, especially now that we have, though we did test it multiple times, kind of a third official touch, maybe on a weekly time frame of our high trend. We only have two on the bottom. So there are two distinct possibilities I'm looking for into this week and into next week. Basically, does this pattern play out? If it does, things don't look so good, as this is a pretty bearish pattern after a move to the upside. We would expect this to resolve to the downside. This would be pretty ugly. This would be the perma-bear's wet dream, maybe. Losing or having this pattern play out and losing our low very easily could take us to new lows, breaking through 2022's 15.5. At the moment, I don't think this is what's going to happen, but as traders and as analysts, we always keep the different possibilities on our radar, and this is a real one. This is likely going to be described by losing the 200-day, breaking this low trend, and our downside targets are going to be last year's low, and then we have to start aiming lower if we see a break. That'd be 13.8, 10.7, and I'm not even going to think about what happens after that. However, I've not turned bearish. Total crypto market cap has retaken the 200 weekly. Let me pull this up quick. Retaken the 200 weekly, and despite Bitcoin's sell-off, still holding pretty strong. So my bias is going to continue to be to the upside for trading, at least for now. Whoa. At least for now. The other scenario, the one that I think we all would like to see more with some exception, would be the less probable in this pattern, however, still entirely possible. What we'd be looking for is essentially some kind of higher low that's not very descriptive, because it really can come anywhere above the 200-day down at 19.5. The obvious levels we're looking for if we see price continue to sell off today, going to be that 618 retracement and our 0.5 sitting at 22.7 and 22,000 pretty much on the dot. Anywhere in this area holding is a much better scenario. What we could see play out in the hopium sense, maybe a higher low, a move back to the top of this trend, and a bump and run. This would be the bullish setup, even down to the 618 at 22K. Holding on to a higher low really does put the bulls back in control. Losing this low is going to be very bad. It really can be anywhere. If we trade back below this low trend line, I'm probably looking at new lows, honestly. However, we're at 24.2. new lows isn't really on the radar at this moment. I just want to basically make this pattern obvious and have you guys looking at it. This is not really great. You don't want to see your highs and lows coming up after a move to the upside. In fact, I point this out a lot. We'll point it out again. We had a very similar pattern back here in summer of 21. Price fell, it created a broadening wedge, and we broke back to the upside. This is unfortunately the exact opposite scenario where we've moved up, made the broadening wedge, and pattern traders are going to look for a test of that bottom trend one more time. Not what I'm hoping. Not at all. Today we have some pretty clearly defined numbers. 24.6 sitting as yesterday's close. That's definitely going to be the target for today if we want to see a bullish move. That is red. Below us, 24.1, and you can see price today has already exceeded both of these levels, having traded higher and lower. A close above 24.1 does avoid a bearish engulfing candle. That's going to be a little better, maybe a little more suggestive that the highs are going to be retested here. Closing below 24.1, likely putting us in retracement, looking to the downside at that 0.5 or 618. Let's make this a big old box. Ooh. There it is. Big old box. That's pretty much where I have my eyes set for the moment. The day continues to be pretty interesting, at least according to Market Cypher B. Shout out to Market Cypher B. Yesterday we were hoping for a little gumdrop here on the red money flow. It does seem to be sagging a little bit with our VWAP coming down, showing us some of that heaviness. That's not ideal. Not ideal. We're really hoping a strong close yesterday would put this back in order. The big player, likely into the end of this week and into the weeks to come, is the dollar. If I can pull up my chart. If you can't tell, I went live last minute. Not as prepared. Big player going to be the dollar, and let's be real, this is not what we wanted to see. We looked at the dollar pretty much every stream now, every day. On the 13th and 14th, we did see it fall down into the 103.5 range, and we pointed out this yellow moving average. This is the 50 daily moving average, and I do not like this. Price seems to have found support there. It's rallied back up, and actually, let's see how far it's progressed. Just to the 618. Cool. Hopefully the dollar chills out at 105 here and doesn't put in any kind of higher high. We might see a rejection from the 618 if that happens. We did break our structure low here, and so the dollar really needs to rally all the way back up to 105.8 and break to see that dead cat bounce scenario play out into the 109 range. At the moment, this isn't super threatening. The only thing that's really, I will say, threatening to me about it is the support found here. I don't like that buyers are coming in. I was really hoping to see this retrace more. The 200-day is sitting above us at 106.6. If we see a break of the high, likely the next pit stop, maybe then a back test of 105.6. This was looking really bad. And there we go. Maybe getting that gumdrop on the red for the dollar. Not what I was hoping for. Not at all what I was hoping for. We have seen Bitcoin and the dollar trade very inversely, but that correlation does seem to be slowing down or breaking over time. Bitcoin becoming more independent versus stocks and the dollar, especially as we slip into what seems like a global banking crisis. Global banking crisis. Credit Suisse today, I don't believe that they were shuttered, but essentially their stock dropped a ton. Credit Suisse is one of the 33 big banks, largest banks in the world. They're a critical bank. Their failure likely to continue the contagion we've seen in the financial zone over the last week. It's going to be interesting to see how the dollar plays out, but we do have Mr. Chirpow joining us on the 22nd for an FOMC meeting where he's expected now to potentially not have any BPS interest rate hike. And I think that is what markets are looking to price in. We pull up the S&P 500. Doesn't appear like they're pricing in yet. Actually, the bearish scenario looks like it played out here. These candles, very gappy. But the S&P 500 looked very strong a few days ago or last week, bouncing the 200 into a lower high. We looked at this on our last stream. The potential for that same moving average to act as resistance, and it does look like it, even though these candles are so gapped. Confirmation will be below 3,800, breaking that low. That's going to be a pretty savage rejection. Likely then looking to sweep liquidity in the 37 or maybe even down at the 3,500 levels. Man, that's ugly. But the takeaway, honestly, is that Bitcoin and stocks are not trading in tandem in the way they have in the past. That's showing the market has pivoted somehow, fundamentally, as Bitcoin's found lots of strength off this banking uncertainty. Market cipher B on the day for stocks, actually not the worst. It does look to roll over, but money flow is holding on there, peaking up, which again is a divergence from Bitcoin as it's slowly sinking into that red money flow. Very interesting. This does seem like the place where the market or markets are looking to diverge. Ooh. We haven't checked back in on GBTC, which is another equally spotty chart here. Looks like we should have. GBTC hit a new high yesterday just by like a penny. I'm going to have to refresh my alert. By like a penny, although down 5% today, seemingly in less trouble than Bitcoin. It's very hard to see these candles. But that's pretty much the price action that happened. Interesting. Although it did hit a new high alongside with Bitcoin, it's just got a different vibe to it. It's got a totally different vibe to it. $14 and 16 above that, looking like the next upside resistances. Let's see. This still looks strong as anything on the day. I do not know what to make of that. I don't know what to make of it. In what world is GBTC bullish and Bitcoin not? I don't know. Perhaps this bullishness is just a foreshadowing of that premium or discount being closed in as the SEC and Grayscale battle it out in court, essentially looking to force them to approve their ETF status. I believe that's going to happen this year. Couldn't tell you a date, but I think it is actually much closer than we think. And this climbing kind of independently could just be that premium closing, that discount closing before an ETF approval. So that could still be months into the future. However, it was a narrative, I think back in like 18 and 19, that narrative has hence pretty much died for the bullish case. Interesting timing for it potentially to be coming back around. So I will be keeping an eye on GBTC for sure. Gold, another big mover, another big factor here. Gold trading past 1900, looking to move back to its highs. It's already completed a 786 or a deep retracement. And typically in markets, when we see that happen, it does suggest that we're looking for continuation past the previous high. 20,000, we'll say. It still has a significant resistance at 1950. But 2,000, this is going to be the upside target I'm going to look for immediately. We do have our 1618 extension at 20,060, which is right around the all-time high. Something tells me again that gold is going to look to test its high trend this year. Kind of a spicy setup as the dollar is showing a little bit of strength here. Maybe that plays into the dead cat dollar bounce narrative. We see the dollar take a little strength back before falling and gold reaching back to all-time highs. It would be quite a thing to see gold trade to a new all-time high this year. I don't know if that's in the cards, but it's looking pretty much, it's looking strong, man. 1800, this level, very critical to gold. Traded below it last year, rallied back in the beginning of this year, almost back tested it for a higher low. A break of your high, gold is going to go soaring. Soaring and exploring. Bitcoin is very much sideways. Very much sideways. Kind of interacting with 24,001 support here. We can see the hour, this hour, swept liquidity at the lows, got bought up, and potentially going to close a candle above 24.1. This would likely suggest a return to our goal for today, 24.6. Not very exciting. I know. We're spoiled, guys. I don't know if you're feeling it, but we're a little spoiled. There's been so much intensity and so much news, kind of an onslaught of things for the last week or two. I know I'm feeling it. This market's trying to burn us out. It's trying to get us to get lazy or sloppy. We got to keep sharp. The hour does not look great. We were looking pretty great yesterday, not looking super hot on the hourly time frame. Money flow looking to roll over. We were following or watching for this potential pattern to play out. Did not get it. We got a lower high, and that began the money flow rolling over. That began. Wow, look at this momentum. This is unusual. You don't really see it like that. That's probably not a good thing. 30-minute, same kind of bearish bias. Unfortunately, 45 clocking in at the same. 15 a little bit stronger than those. The 5-minute still leaning bearish. Really zoomed in, we could be seeing a little bit of an inverse head and shoulders here with our neckline at 24.3. I think that really just lines up with the upside target of 24.6 for today. Spectacular. Spectacular. This is not looking so hot. So what I don't really love about this, and this is kind of leaning into that retracement argument, that 24.1, that's an important level for today, but it is a support that's been tested now over and over and over again on lower time frames. Our highs have come down. That's starting to paint an unfortunate bearish pattern. The old flat bottom. The old flat bottom. Nobody likes a flat bottom. Haha, giggity. Breaking our high trend could change that, but at the moment, not a lot of evidence of that on lower time frames. The only thing I kind of like about it is the hourly this hour. Sweeping liquidity low, baiting shorts, closing longs. That's not a bad sign. Not a terrible sign to see. Provided it got bought up, which it did so far. I'm going to keep looking at this. This was a very good indicator in the past. Funding rates, not as much in the last year or two, but in the last week again, kind of bubbling up as one of the most confident trading indicators, at least over the last maybe 4 or 5 days. We've been tracking this closely, and what we saw was, at least to my knowledge, historic low funding rates, suggesting that shorts were getting hot, overzealous, and opening over-leveraged or too quickly in proportion to longs, and that is rocket fuel. I tweeted it. You should follow me on Twitter, tomcrown crypto, if you don't. I tweeted about it, I think it was on Friday, that I'd never seen them this high. That continued throughout the weekend as price continued to rally. Unfortunately, in yesterday's stream, we saw these funding rates get a little heavy. Now that has reset. We do see them actually, I will say, moderately bullish. 0.04 is pretty deep. 0.02 is moderately deep. I don't know. But we saw these flip to crazy high funding, and look what happened. All through this rally, we had very negative funding, pushing the market higher into a short squeeze. Around the peak of yesterday, that funding flipped and prices began to trend back down. Now, kind of game theory going on here. If price does move down to our 0.5 or 0.6 retracement, that may be where the shorters jump back in as they see a break of structure here on a particularly bearish pattern. Keep an eye on funding. You can check it out. It's bybt.com, or I believe it's called coinglass.com now. It's a free site, but it has funding there. Really easy format to check it out in. Hopefully that'll be enough. Without that, it's going to be kind of hard pressed to imagine this resolves to the upside without some reason, some catalyst to bait in more shorts. People got pretty bullish on the 200 break, myself included. And that's typically when the market looks to cool down. Classic price action here on Bitcoin. Get everybody hyped, break the level that everyone's looking at just to sell off. Now, actually anecdotal, what happened yesterday on the day I talked about weeks ago now. Weeks ago, if I can get this 200 weekly to generate. There we go. Weeks ago, on the way up, this was like in January, I talked about our return to the 200 weekly, but doing it quickly, overshooting it, and then getting sold off before the day ended. That is honestly what happened here. Let's remove everything. That is honestly what happened here. Now, these dailies did that as well, but this was much more of a rejection than I was looking for. A very heavy top wick, pushing it back under intraday. Honestly, the signal that the bull market or bear market rally, dead cat bounce, whatever you want to call it, is going to be a daily close over 25.2. That could be coming in the days or weeks ahead. I would like potentially to see that higher low. I think that will cement the bullish structure and push the market up. But that was what we were worried about. However, my fear's a little alleviated because we've tested this multiple times. My real fear was that we'd run straight up into it, reject, and smash to new lows. That did not happen. So remember, as all supports and resistances are, the more it's tested, the weaker it becomes. And so now we have 1, 2, 3, 4, 5, now 6 daily tests. If we didn't have this lower low, this would be beautiful. It'd be that beautiful ascending wedge everyone was looking at, I don't know, 2 weeks ago. If you haven't read between the lines, you'll notice that when everyone starts looking at something on a chart, it doesn't play out. It really doesn't. The market is immaculate at getting everyone to look at something and then moving the other way. Kind of similar to the low on the 10th here. This low, everyone got very bearish, expected a dump down again. It didn't happen. Did not happen. No, we don't see any really similar price action to this at all, which to me is pretty comforting, I'll say. On these previous momentum legs that shot us down lower, we only saw higher highs basically and higher lows. This was true in May. This was, not in May, in February, in May, true again in June. Does look, this wasn't a momentum leg. But now this is a very different structure. Very different structure. And that's promising to me, honestly, just because we've escaped what seemed like the repetition of momentum legs from hell over and over and over again. So that is not a bad thing. Let me slap this around. Guys, by the way, I haven't said it at all. Smash the likes and subscribes. If you haven't subscribed yet, you haven't liked yet, help us out. Clicks are free. Rehashing really quickly something that I posted, I think this was on Monday. Potential on the week for a 3 rising methods, an incredible, pretty rare and very bullish pattern on a weekly time frame. I don't know if we've ever seen one on a weekly time frame. All we need is to close this week in 4 days above 24.2. So even if we trade down to that higher low potential, if by Sunday the market's pushed back up above 24.2, that's going to be a pretty great sign, honestly. If we use our fib tool to kind of approximate our measured moves to the upside, if we get that close, those would put 29.5 and 32K in sight. That would be a pretty big but completely reasonable move, especially if the weekly can close over 25.2. Something tells me, though, that we don't see that this week. Maybe, I don't know how much time will pass, but then when we eventually do really retake the 200, which will happen, we just don't know how much time it'll take, I think it'll just shoot through and close much higher. Probably whatever happens, shoot through, then come back. Come back near miss. Don't actually even test the 200. Get real close, and then move up. That could be who knows how far away, but that is what I think is going to happen into the future. That's a juicy measured move, man. That would be really great to see. I think what's valuable here is when you look at the week, this is much cleaner. There's a lot less noise, and it's kind of crazy to imagine the roller coaster of emotions that we've seen through this move. People have been not euphoric 100%, but very, very jazzed about the upside price action, and people have been very scared, very afraid of the downside price action. And on the week, you can see this is really just confined to a very tight range. That 3 rising methods, I think, is the most defining of that range, 21.7 to 24.2. Really looking on the week for a close above. I didn't even notice. I think I did, but I forgot. Weekly closes at 24.2. This is the exact same close on August. So perhaps, actually, this is not even perhaps. With strong confidence, actually, I can say a weekly close above that level looks very good for this chart. It'd be a higher close on the week after a double top. After a double top, which is potentially even on higher time frames. But in addition, that would also validate the 3 rising methods. So a weekly close above 24.2 is incredibly good. That would be a higher weekly close and the 3 rising methods. Wow. At the same time. 4 days and 6 hours to go. Definitely could happen. Definitely could happen. That kind of puts this day in perspective too. Puts the day in perspective a little bit here. This sell-off didn't feel good, but technically still chilling at that weekly level, potentially holding it as support if the day settles up higher. That would be pretty cool. Oh no, this is not looking great. Oh no. Oh no. Let's see if I got any alerts last night. Adam. We looked at Adam yesterday for somebody. I'm not going to do a ton of alts, but let's see what Adam did. Oh no. Oh no. Adam rejecting from that trend line, coming on back down. $11.81. Something tells me Adam's just fine, though. Something tells me. Currently at its 0.5 retracement, 1142 for the 618. Wouldn't be a terrible snag potentially for the right trader. Sucks to see that trend line coming back into play. See how Ethereum closed yesterday. Ethereum mirroring Bitcoin here, failing to set that higher close on the day despite hitting a higher price. You know, as I look at this, let's bring this on back actually to Bitcoin, because there is one more thing that could be playing out here. It's more visible on Ethereum in my opinion. There it is. More visible on Ethereum, but we'll talk about it. So because we had our highest point in structure move to a lower low, and that lower low moved to a higher high, we do have a diamond pattern. At least the way I describe diamond patterns. We do have a diamond pattern potentially in play. There's not much value identifying this early, honestly. There's not much value, but we're going to do it anyway. There's not much value, mostly because a diamond doesn't give you really any specifics. We don't have a low or a high. We need to see price come down and then bounce to really even paint this. But it's something to keep on our radar. If we do see a higher low and then maybe even a lower high after, we might be seeing a diamond play out here, which wouldn't be ideal. Diamonds are considered reversal patterns, so you have a move to the upside. A diamond likely making that reversal move to the downside, but something to keep an eye on. Something to keep an eye on. Honestly, I don't think that there's jack else to look at today. Low time frames do not look good. Do not look good at all with our lows coming down in this crazy, crazy flat bottom. It does really look like it wants to do some kind of further falling. Our oscillator's not looking super hot either. Consolidating now below 24.2. Yep, not the best take. Not the best take. All right, well, I'm going to be on BitBoy's AM show tomorrow if you guys want to tune in. Of course, you don't have to. It's a brief segment, probably around like 11:45. Try to go live after. I wanted to update you guys. I don't have much else to look at. We're really just playing will it, won't it game with our range here on the day that we discussed in the beginning. Moving up above the high or below the low is likely going to suggest continuation. We went through those prices that we might look at in this stream. That's all I got for you guys. If you haven't joined the Discord, jump in there. We're going to do a live airdrop as we do every day after the stream. I'll make you a Bitcoin holder. Sign up with the links in the video description below. Bybit and Fairdesk, great exchanges. Fairdesk has no KYC. I know you guys like that. Bybit, you guys all know Bybit. Use my links to help support the channel. That's it, guys. I'll see you tomorrow. Crown out.